This is Jack from Alphacharts with a state of the market video. Today is June 15th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities I mentioned. Know your return frame and risk tolerance. All right, thank you all for watching the video. I do appreciate you. Please like and subscribe to the channel if you haven't done so already. And what else? You can find me on Twitter or X at Alphacharts365. Please check me out there. I'm always posting free stuff on there. I do have a subscriber group, as you probably know. If you haven't tried it yet, give it a try. You get so much content throughout the week, totally worth it, and it's only $10 a month, so not much to lose there. Let's keep going. All right, so hit that subscribe button. Thank you. All right, so SPY. SPY continues higher, and let's just look into here, and you can see how it is just, nonstop, higher, higher, higher. All the moving averages are moving higher, and everything looks really, really good in SPY land. When we go to the weekly chart on SPY, and let's just zoom out just a little bit, we have this big base right here. And we do fibs from here to here, which was this top right there, though 1.618 is roughly at 545. And that is roughly where SPY hit and then just retreated just a tiny bit. Now, is this going to be the top? Yeah, I personally, don't think so, but this is a place where we may see some consolidation, maybe a small little pullback, maybe a week or two of maybe something like this, and then potentially a move higher to the 600-ish area, right? That's just a guess, but I think that's a reasonable thing to think, especially with as extended as it is. So just something to consider with the Fibonacci extension, the 1.618 right there. Yeah, and we'll see. We'll see. It does have like 3 days consolidation, but overall, hey, it looks good. Does the volume bother me? The answer is no. It's summer. And again, volume is secondary to price. So it doesn't. Now, what do we see? We do see RSP under the 50 days. So this is the equal weight S&P 500 under the 50-day moving average and kind of moving lower, right? So as SPY is moving higher, RSP is moving lower. That's a divergence. There's no doubt about that. So what does that tell me? It tells me that right now that people are concentrating into the largest names that in the SPY. And so let's go to the SPY. Largest names: Microsoft, 7% weighting; Nvidia, 7%; Apple, almost 7%; Amazon, 3.5%; Meta, 2.5%; Alphabet combined about 4% weighting, right? A little bit more. Broadcom, 1.62. There's some Berkshire and some Eli Lilly in there, and that's the top 10%. I'm sorry, the top 10 holdings, and roughly, was it about 30% or so? You do the math. But that's quite a bit of holdings, right? So that's why I think you're seeing people pile into those names more than they are piling into other names, and why you see this divergence. Is that abnormal? I can't say it's totally abnormal, but we are seeing that breadth here is probably getting, washed out a little bit. Look at the Qs, they're even stronger. I mean, they are real extended right now from their 9-day 2%, from their 23-day 4%. So when they get this high, a lot of times you see some sort of pullback, right? Like in here. When you get this high, as a 3.5% almost, and you saw a little pullback. So, don't be shocked if, right, there's 4% right there. Don't be shocked if we get a little pullback, maybe to the 23-day or so. But that could be, that could hit your account. So just be careful with that. Again, Qs look great. Equal weighted Qs don't look terrible, but they haven't broken out yet. And if they break out of here, I mean, we are off to the races. We're still waiting on that to happen, but they look much better than the way SPY RSP looks. Looking at the Qs also, the cap weighted 50% are in these names with these weightings. So that is, the top 10 are 50% of the holdings. And you can see a lot of the same names we saw in SPY, just more concentrated. And because of that, we are seeing Qs will act even better. Does it have to pull back here? It doesn't. Maybe it gets up to 500. We don't know. But this is a place where we could see some sort of consolidation pullback as it's, I don't want to say going parabolic, but it's going pretty straight up right there. Now, mid caps are more equal weighted and smaller companies, and we're seeing, the opposite. We're seeing more like a breakdown than we are a breakout. 50-day moving average is now going lower, and there's really not much of a reason to be hanging out in mid cap land at this point. And then IWM, very similar situation. I'm still kind of hanging on to this. It may make a bottom, but it's looking less and less like that. And yeah, I mean, it may come down to retest this 200-day at 192. If this 198 breaks, I think 192 is very, very likely. And let's just have some fun here. And that's, 3%, from actual price today, it's probably closer to 3.5. Yeah, 3.5%. So it's in the same range as what we've seen, right? If we saw a pullback, that would be in general. And I would watch the 200 for to try to hold. All right, let's go to XLF. So underneath the surface, we have financials breaking down, really. As much as I thought they were going to really hold up here, they just didn't. They just broke down, and we'll see where they go. Maybe they go to 39.50, maybe lower. But either way, the more important thing is as an indicator, which what way I'm using it here, they're under a 50 and 50 starting to decline. That's not a good sign. SMH, led by NVIDIA and Broadcom and a few others, they're doing well. Semis are doing well. So that's a very big positive for the market. And then the equal weighted semis. So they try to break out. They came back. They kind of retested a little bit. I think it's almost 244-ish holds, right? I think we're fine. If 244 breaks, then that's a problem in semi land. But right now, semis look great. Transports. Well, we've been talking about transports for years, right? We watched transports, and transports have been in a downtrend, and they're under the 200-day, and that's never a good thing. The only positive I could say on Friday is that when they try to break lower, the buyer showed up. So I think we now have a very, very serious area right here, a break of this area, and I would get much more cautious in this market. It's already, you're always seeing a winner and loser market in the fact that there's only a handful of winners, and the rest of the market is highly rotational and just very, very hard to be involved in. Now if you hit a couple of the big winners, you're doing great. And if you didn't hit a couple of those big winners like NVIDIA or Broadcom or some of the mostly semi names, some of the mega cap names, I've done well this year. But if you haven't hit those, then it's been a very tough slog. If this breaks below, what's the low there? We'll call it 62.25 or so. What's the low there? Yeah, or 62. A break below 62, and I think things are getting much, much harder. You see a very flat 200-day, and now price starting to live below it, unfortunately. So IYT is a problem. XTN is another way to look at transports. It's more of an equal weighted product. It also had buyers show up right with a stick safe, right? If I do this right there, right, a little bit bigger of an area. But let's try to break down, couldn't. That's maybe encouraging, but it needs to do a lot more than that. That's maybe day one, right? Maybe. If this breaks down as well, then man, I think we're in a much, much harder environment. ITB, this is housing. Again, with a stick save right here. Tried to break down, couldn't. Maybe a higher low, maybe. We'll see. This one looks a little bit better, but still not really, really great. If we were to inverse this chart, we'd be watching for the breakout. So I think we should be watching for the breakdown. Obviously, this 100 level is key. If it breaks, I think they're likely to go to meet the 200-day. XHP, again, another way to look at housing, looks very similar. Again, buyers that show up there, it's right at the 50-day basically. It's a really do or die thing for them too, as well. So again, a lot of questions in the ETFs, right? Again, this is a kind of a measure of future outlook for the markets, and really semis looking good, but beyond that, not much else is looking really good. Things are living below the 50-day. Things are near important key levels, especially transports, and so that's usually going to be a problem. There's winners and losers, and in general, after going through these charts, I think that if you're in the right names, you're in the mega caps, we should be long. And if you're not in those names, you have to ask yourself why. Why aren't you in those names? Because they are the ones that are leading the market, and everything else is being a very, very hard, um, very, very hard to make money in the market outside of that area, because the rotation from one sector to the other is so fast that you get caught. You see one that's leading, and then by the time you get positioned in it has transitioned to another sector. So cautiously optimistic is still where I'm at. If you haven't done so, check out my subscriber group. It's only $10 a month, totally worth it. So appreciate you guys doing that, and hope you all have a great week.